So, market forces. We are living in a time of hyper changes in the firms below the big four firms today. If we would have been standing here in the mid-1990s, we'd have said we've been living in a time in hyper changes of the big eight. What's below the big eight today? And they're being led by market forces. They're being led by firms desiring second-tier firms from basically 5 on down, 5 to 100, 5 to 500, trying to create national brands, trying to create geographic footprints, trying to address specialization issues, trying to build certain size capacities, some of it being driven by private equity issues, where you have large regional firms today. We don't have private companies going public as much, but they're accessing capital through private equity and venture capital. If you're a regional firm, let's say you're in Seattle, Washington, you're a strong regional firm in that area, a lot of private equity money in that area, but when that private equity fund starts buying, or the company they buy has footprints outside of that region, then the question becomes, does your firm brand translate to other private equity investors, et cetera? So there's a huge element of how you have client retention in that space. How do you create international networks that are meaningful in that next tier as clients go international for the larger private companies? And how do you create brands that transport outside of the U.S.? All of these are market forces. And so what we're seeing today, in the last 18 months or so, there's been 4 mergers of top 25 firms, either announced or have actually been executed upon. Actually, there was 5 announced, and 1 fell apart. I would say that if you look at the top 25 firms, and you take, say, a 5-year window, maybe a 3-year window, probably all of them will have significant transactions with another firm in some form or fashion. There is a tremendous amount of activity happening in this area. A lot of those firms are driven by wanting to have a footprint in New York, or at least the Northeast, D.C. to Boston. Those are big-time market forces that are affecting those. If we look at the firms in that size, a disproportionate amount of them are in the West and the Southeast, and do not have presence in your own backyard. And that's a big driver from this standpoint. I think if we put a list of the top 25 firms up there for you right now, and if I came back 5 years from now, I would bet you, I'm talking about the top 25 below the big 4, I would say probably every one of them, if not every one of them, 22 or 23 of them, will have significant transactions and even potentially name changes in a 5-year period. That's the type of hyperactivity that's going on. That's also cascading down into the top 500, and then it's also cascading down from the 500 to the smaller firms. We're creating new firms at rapid fashion. And let me just close by saying, if you're doing work across state lines, New York is a mobility state now. We have 49 of the 51 states that have mobility legislation. California and Hawaii do not. This is a tool, cpamobility.org. If you or your staff is taking your New York license and you're going to do work, not moving, but going to do work for a client outside of New York, you click on this. You say, where's your principal place of business? New York. Where am I going? What am I going to be doing? Compilation and audit. That tells you exactly what you need to do in that other state, which most of the time is you don't have to do it. Okay, so it's a very popular tool that we've created with the state boards. And then I want to just close with this sort of notion. We're in our 125th anniversary. This profession has been very good to the members of this profession. We have record numbers of people majoring in accounting. We have record numbers of people taking the CPA exam. We have been relatively recession-proof as a profession. And that's true in most recessions in the past. But there's also a notion of us giving back to society. We have a large number of people moving to retirement. They're going to be giving back a lot. But we face a lot of issues as a country today. 2 tools I just want you to be aware of. We just announced with our 125th anniversary something called Total Tax Insights. It allows any person in America to go on a county-by-county basis, put in their information. It's free. This is not a prep tool, but it in fact is a tool that you put in your information, and it calculates how much tax you pay on a basis of 20 different taxes. We all know about income taxes and payroll taxes, right? But it includes state taxes, county taxes, gasoline taxes, cell phone taxes, landline taxes, cable television taxes, cigarette taxes, alcohol taxes, hotel motel taxes based on how much you travel, etc. And it gives the person a pie chart and says, you make X, you live in more than 3,000 counties in this country, so on a county-by-county basis, it says this is the percentage on 20 different taxes that you pay on all different levels of government. Our belief is that we're going to have a major debate on this, and we want the debate to be about the total burden. It's a political decision, what it should be, how it should be allocated, and what we should be spending. But it is, in fact, something we should have some consistency on. And the last point, I would call your attention to a video on our website. It's called What's at Stake. It's about, about an 8 or 9 minute video. The chair of our board is on it. We give it to every member of Congress. And U.S. citizens. It's something that they should look at. It basically takes the United States federal financial statement, which there is one, and says, members of Congress, citizens, but first members of Congress, you have a fiduciary responsibility to all of us. And if we were on the board of directors of a company, we'd need to know what's in the financial statements. You need to know what's in the financial statements. You need to know what our financial situation is. You can make political decisions, but you ought to at least know what our financial statements are. And we give them a top-line analysis of that financial statement. And let me give you one data point, because there's a bunch of footnotes there too. If you consolidate what is in the footnotes, which is essentially off-balance sheet obligations of the United States government, our deficit based on the financial statement is not $14 trillion, but $61 trillion. And if you take all of our assets and we throw in Bill Gates and Warren Buffett and everybody else in the United States of America, all of their net worth, everybody, it's $59 trillion. Now, you would sit down with your client and say, we got a little bit of a problem. And so what we're trying to do is educate members of Congress that, look, there's some serious issues you got to deal with. I don't care if you're Republican or Democrat. There's some serious issues you have to deal with. And you know what? You have a fiduciary responsibility to understand what's in the financial statement, just like if you were on the board or just like you were the owner-operator. I wish you well with the rest of your conference. Thank you for your attention, and thank you for everything you do for the